Money FM 89.3, best of breakfast. Eco Money on Money FM 89.3.
Welcome to Eco Money. So am I going to get any returns if I invest in the green bond market? That's a question that's probably on your mind if you're an investor who's interested in parking your money in climate or nature-related investments. Well, the green bond market has emerged as an impactful financing mechanism in climate change mitigation efforts, and studies investigating this market have revealed the notion of a green premium or greenium within green bond pricing. So to help us break down all of that, we're joined by Stefen Macaskill, research fellow at the Griffith Business School and energy management planning engineer at the Council of the City of Gold Coast, Australia. Stefen, welcome to the show. Thanks so much for joining us.
Hi, Audrey. Thanks for having me.
Great to have you on to talk about this. So let's start, Stefen, by breaking down some of the complex terms like a green premium or greenium within the green bond market. For those who may not be too familiar, what exactly does this concept mean, and why is it such a significant factor in the green bond market?
So the greenium implies that the yield an investor is willing to accept for a green bond is lower than that of a comparable conventional bond. So it can manifest itself in both the primary and secondary market. So in the primary market, bonds are issued for the first time in exchange for a coupon rate or a yield, and that may be, from our research that we found, lower than conventional bonds of equal characteristics at issue. Once into the secondary market, you're off to the races. Bonds are trading freely in the open market, and prices can vary quite widely. And that's where we see a little bit more of a green premium.
All right. So you highlighted your research there, and we know that you've looked into which green bond characteristics are more likely to exhibit a green premium. Could you walk us through the key traits that stand out?
So basically, the most common bonds to exhibit a green premium comes down to quality and assurance of those bonds. So those bonds, the green bonds that follow a defined green bond governance and reporting procedures, are investment grade and also government issued, seem to exhibit the greatest premium. So investors are looking to find the highest quality and the greatest assurances that the investments that they are making are actually going to green assets.
Okay, and we do know that green bonds have been gaining some popularity in recent years. What's driving this demand, and how would you assess their popularity and its growth trajectory?
So there's been a general kind of recognition of human impacts on climate change and of social and large push towards the climate mitigation efforts. And this has stimulated a lot of government and corporate action to act on this to try to decarbonize their efforts. So there's a couple of different factors, broadly kind of organized into social, economic, and environmental factors. So on the social front, public companies and countries, for that matter, want to be good global citizens. There's public pressure from shareholders in some instances to develop renewable energy assets and other decarbonizing activities. Economic factors, green bonds could be a tool for developing social capital or brand value, especially for corporate issuances. So there's some studies that suggest that just simply announcements of upcoming green bond issuances can correlate to higher stock returns for some corporations. Potentially can lower the cost of borrowing. As we mentioned, the green bond issuance can often be overly subscribed. They're in high demand amongst investors. And on the environmental front, they are a demonstrated and measurable way to measure impact towards net zero objectives for many companies and countries as well.
All right. So, Stefen, I also want to bring in ESG factors, environmental, social, and governance. So these are often pretty major influences on investor behavior. How do these considerations kind of impact the pricing of green bonds compared to traditional bonds?
So we did a study some time ago that looked at about 125 different studies. So it's a study of studies. So there's a fair bit of ambiguity on is there a green premium or isn't. So this study looked at 125 different studies that looked into green bond premium, and what we found out of all of them was two different outcomes. So for the primary market, about 56% of those studies showed a premium, and those premium spreads were around about an 85 basis point decrease on the yield to 213 basis point increase in the yield. So the primary market was all over the place. In the secondary market, however, about 70% of those studies showed a premium. So the greenium spreads were always in a lower yield, so between 1 basis point to 9 basis point discount. But the market is always evolving, and we do need to continue research in this field.
Okay, and one of the big questions we have is, the why. Can you tell why investors are willing to accept a lower yield on green bonds? Are environmental concerns the biggest motivator here, or are there, other social or economic factors here at play?
There's a few things going on. Environmental concerns are definitely a big one. So investing in green bonds aligns with ESG goals for many institutional investors and pension funds, insurance companies, and whatnot, mutual funds as well. They're increasingly incorporating ESG criteria into their investment strategies, which we're seeing through in the high demand for these type of investments. There's risk mitigation as well in considerations. The kind of status quo of investing in, say, oil companies does come with some element of long-term risk in specific sectors. So investing in green bonds, you're able to mitigate some of these risks associated with non-sustainable industries, which may in the future come up against things like regulatory penalties or stranded assets potentially. And lastly, diversification as well. Green bonds allow for large institutional investors to diversify their portfolios across a wide range of different assets.
All right. And so what about for companies or governments, looking to finance climate change projects? How can they perhaps even leverage the green premium to their advantage? What implications does that have on how these projects are funded?
I guess my advice would be to start early, to identify, promote, and group any pro-environmental investment activities that will be taking place for that organization or country. Our research finds that the best chances for issuers to successfully achieve the premium is to engage with a third-party verifier to reduce greenwashing risks and also enhance investor confidence associated with those green bonds. And then lastly, there is a high demand for sustainable assets. So the growth of the market shows a clear and rising demand for such investments. So the capital is there. The investors, they just need the projects.
All right, Stefen, finally, with U.S. President Donald Trump essentially having pulled the U.S. out of the Paris Agreement, could that weigh down the growth of green bonds globally in the coming years, or do you think the market momentum will continue?
Well, we're not seeing much slowdown at the moment. So every year it seems to break new records. Last year, total issuances was about $450 billion. It's expected to expand to about $1 trillion by 2030. The U.S. may be perhaps muted in the coming years with some large players pulling out, but it's not expected to derail the market. A large portion of issuances are coming out of Europe, and they're steaming ahead as always. So they'll, imagine, pick up the slack that the U.S. may not.
All right. Well, it's clear that while green bonds offer a unique opportunity to align financial returns with environmental impact, understanding the pricing dynamics and investor behavior play into the equation that will be key in shaping the future of green finance. We've been speaking with Stefen Macaskill, research fellow at the Griffith Business School and energy management planning engineer at the Council of the City of Gold Coast, Australia. Stefen, thanks so much for your time and your insights today. Really appreciate you joining us on the show.
Thank you very much. It's been a pleasure.
Thank you. Stay right here with us on Money FM 89.3.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.